You're welcome back, and this is the marketplace. Inflation continues to record a decline as the rate of the month of July dropped to 16.7%. This represents about 1.7% reduction from the 18.4 as recorded in June this particular year. The drop has been attributed to the stability of the cedi and also the seasonality of food prices across the country. Dr. Philomena Nyakun explained further at a news conference just a while ago. The Bank of Ghana is working to increase the minimum capital requirement that every commercial bank must meet in order to operate in the country. This is one of the several measures the regulator is considering as it looks at ways to limit number of banks in operations and improve their financial position. So, what could be the impact of this action on banks and even your deposit? George Avi has more in this report.
Joy Business is learning that the move has been influenced by the increasing number of requests from commercial banks to be granted waivers to finance certain projects in the country beyond a fraction of their minimum capital. Sources say the regulator is worried about this development and the number of applications at its end from several financial institutions wanting to operate as a commercial bank. Joy Business understands the minimum capital could be increased to about 300 million Ghana cedis from the current 120 million Ghana cedis for existing ones, with the exception of those banks that have been granted waivers to still operate with 60 million cedis. Joy Business is learning that the action will be implemented after extensive deliberations with all stakeholders in the industry. This means that if the Bank of Ghana settles on additional capital raising, it may not come as a surprise to those in the industry. Sources say, unlike previous instances where the central bank just signaled its intention to increase the capital, this time round it appears the regulator is serious about it. There are currently about 30 commercial banks in the country, with the latest entrant being Sovereign Bank. However, with more applications on Bank of Ghana's table and with some 3 institutions set to attain their full banking license very soon, the number could increase to about 33 before the end of this year. So what will be the implications of well-capitalized banks in the country on the economy and businesses? Well, for some analysts, it could lead to financing of more projects and even bigger ones in the country, especially those in the oil and gas sector. It could also force most of these banks to increase credit to individuals and businesses. The capital increase, if it happens, might also lead to some expansion drive by some of the banks into new areas in Ghana and even to other West African countries, just like what happened in Nigeria some time ago, which resulted in a lot of banks from that country coming to Ghana. This could lead to more employment opportunities in the industry for graduates coming out of our universities as the banks strive for more personnel to aid their growth.
Now to our earlier story, and as inflation declined from 18.4 to 16.7, the development means even though the general price levels of goods and services remain high, that the rate of increase in the month of July was lower than that of June. Let's take the clip.
Saying that in July 2016, the year-on-year inflation rate was 16.7% compared with the 18.4% recorded in June 2016. The monthly change rate in July 2016 was 0.9%, while that for June 2016 was 1.3%. The main price drivers for the non-food inflation rate were education, 35.4%, recreation and culture, 28.3%, transport, 27.2%, housing, water, electricity, gas, and other fuels, 25.4%, clothing and footwear, 24.3%, and furnishings, household equipment, and routine maintenance, 23.0%. For the food inflation rate, the price drivers were vegetables, 12.0%, oils and fats, 11.7%, mineral water, soft drinks, fruit and vegetable juices, 10.9%, coffee, tea, and cocoa 10.2%, fruits 9.7%, and meat products 9.3%. At the regional level, we saw that two regions, that's Greater Accra and Ashanti, recorded inflation rates higher than the national average of 16.7%. The Greater Accra recorded the highest year-on-year inflation rate of 21.3%, followed by the Ashanti region with 18.0%, while the Upper East region recorded the lowest inflation rate of 10.7%.
Now, in other stories, attraction of investment into the country has for this year not been affected by upcoming election. That's the conclusion that one draws after going through the second quarter Ghana Investment Promotion Center's report. There is more in this following report.
There had been predictions by some economists that because of uncertainty surrounding the elections, a lot of foreign firms would hold on to their capital. Some of these reports had projected most of the capital will come in from next year, when it would be clear who would be managing the economy for the next 4 years. But the latest GIPC report covering investments from April to June shows that investments brought into the country by foreigners shot up by 400% to $1.41 billion. This represents a significant increase over the last quarter of this year and even the same period in 2015. The Ghana Investments Promotion Center is projecting that over 4,000 jobs will be created from these investments. Majority of these projects will be located at Greater Accra, whilst the services sector would attract most of the projects. China tops the list in terms of having the highest projects registered in the country. The report by GIPC confirms reports by Joy Business that the upcoming elections may not have any negative impact on the economy.
Now, the question is Ghana ready to take advantage of rate cut in advanced economies as emerging markets become the preferred investment destination? That's exactly what we are looking at here today. But then now let's take this story in full so we look at the perspectives as we draw close. Capital, they say, is the most fluid and choosiest among all commodities. Its choice of destination is defined by factors other than size and complexity. It has responded favorably over the years to stability and profit, irrespective of where they are found. Capital has been the busiest as central banks across Europe, Asia, and now the United Kingdom adjust their benchmark policy rates in response to changing economic circumstances. Some analysts say smaller economies has been the most beneficiaries of these, for example, Ghana, in this partnership. But how is Ghana taking advantage of this? To help put this in perspective, we are joined from London by Russell Padmore of the BBC and Kwame Ofori-Esomenin, who is the Managing Director of Ghana, the Ghana Growth Fund Company, a subsidiary of Group Indum. So we have Russell Padmore from the BBC. Russell, you're welcome to the Marketplace.
Well, thank you very much. Good to be with you.
Good. Can you give us a background as to the rationale behind the drop in this rate? I mean, unprecedented in the history of the Central Bank of England.
Yeah, the British Central Bank or the UK Central Bank or the Bank of England, as it's known, has cut interest rates to a historic low. The first cut in about 7 years, actually. Interest rates now down to a record low of 0.25% or 0.25%. And do remember that the Bank of England really, alongside that, unveiled a huge stimulus package for the economy as well. The experts here are particularly worried about the fallout of the decision, the vote by the British people in the referendum in June to leave the European Union. And that really has cast a cloud of uncertainty over the British economy, never mind the economy of the European Union. So ultimately, the central bank, the Bank of England, has looked at the situation and thought it needs to encourage businesses. The economy has suddenly turned very, very sluggish amid a lot of predictions of the fact that there will be some sort of recession somewhere down the line on the way to leaving the European Union. And the idea really of cutting interest rates is to make it cheaper for businesses to borrow money, because then hopefully those businesses will borrow at the lower rates, the lower cost of borrowing, and reinvest in their own company to expand and hopefully create more jobs.
exactly the perspective I want us to actually dwell on, because as the English people, English businesses are getting interest rate lower than before, so the British economy can actually revise and reform itself. Investors, on the other hand, who are much more interested in the returns on their investment, would want to see rates a bit higher, for which some reports are suggesting or saying that emerging markets, like smaller economies, have been the toast of the moment, attracting most of these investors from Europe and England, for example, sometime also from the United States, basically. Now that now that the rate is being cut, but I mean across board, even in Japan, they're doing negative rate there. But Ghana and Africa aren't attracting these investments into their fold. What do you think is accounting for this, and how do we restructure and adjust our economies to take advantage of it?
Well, you have to remember that countries like Ghana are classed as emerging market economies, or some other nations in Africa, the economies there would be regarded as frontier economies compared to the developed economies. And it's all about risk. Now, we do know that, imagine if you'd invested in Ghana, let's say 5, 10 years ago, hoping to get a good return, suddenly the country runs into a financial crisis. So this is why countries like Ghana, when they offer investment in the shape of government bonds to different investors to buy into the debt of the country effectively, that the government of Ghana has no choice but to issue that bond at quite a significant return, quite a high rate of interest. And then that feeds into the rest of the country. And this is why interest rates in Ghana are much, much higher than they are in the more developed or industrialized economies. It's all really based on the risk of investing in that country. Remember, Ghana is still trying to unravel itself from the financial crisis that the government has run into with the help of the International Monetary Fund. So there's a lot of things at play, but the biggest factor is the risk of foreign investors. Countries like Ghana are seen as a bigger risk to invest in. And of course, let's look at the oil industry, for example. Ghana is an exporter of oil. Well, if we see a slowdown in the European Union, a slowdown in the British economy, that's going to feed through to demand for oil. And ultimately, a lot of the customers for the oil from Ghana would be in Europe, and that doesn't do Ghana any favors when demand for Ghana's exports of oil falls somewhat. That would, of course, lead to the lower price for oil, which once again hurts the revenues of the government and its budget planning. So it's all about risk, and Ghana is considered much riskier to invest in.
Okay. Russell, you hold on for me there, as we are also joined on the line by the Managing Director of Ghana Growth Fund, a subsidiary of Group Indom, Mr. Asumani, way out there in the United States, joining us. He has some strong perspectives to share with us. Mr. Asumani, you're welcome to the marketplace. What exactly do you have as saying that we need to sort of like restructure the economy so that we can take advantage of some of these challenges happening back there in Europe and the Americas?
Well, how are you?
I'm very good.
How are you doing? Good. You see, the whole world, every country is trying to stimulate growth. Is trying to create employment, and at the same time, bring money to consumers to make sure that they have spendable money to spend to expand businesses. Because the sales are a function of production and employment. That is what every country is trying to do. Every country is trying to create an atmosphere, environment that will build the private sector to create jobs. Ours is different. In Ghana, what we are trying to do is that we're trying to suck money from the economy. You know what UK did is trying to give money to ordinary men and women to spend. Cutting interest rate means that they have more money into the economy. People can borrow so they can spend. They are trying to raise inflation, right? Ours is different. Ours, Ghana government is trying to cut deficit, or not trying to, it's cutting deficit. That's number one. By way of cutting spending, right? When you cut spending, government is the only source where money can come into the economy. The economy is you and I and the businesses. If government doesn't spend, we don't have money in the economy.
So Mr. Asuman,
if you don't have money in the economy, you cannot. Hello?
Yeah, what I'm saying is that, so how do we take advantage of these challenges back then in Europe and Britain, for example, to attract investment to Ghana?
You know, I think that we need to build our economy first, make our economy attractive, you know, before we think about what do we do outside. If our economy is very attractive, you do not spend much time to call investors to come in. Investors will come in themselves, right? The gentleman was talking about the riskiness of investing in Africa. Yes, but you see, if the private sector is doing very well, and there are more jobs, there are a lot of spendable income, investors will come. You don't have market, right? If you don't have market, how would they come? People don't have money to spend. If you don't have money to spend, who will come and invest in an economy where people sales can't go on? You have a problem.
So you're suggesting that government should make money available irrespective of the cost of it, so businesses can get money to actually do business here. Mr. Asuman, thank you very much for your time here on the market.
I'm sure. Hello?
Yeah, what I'm saying, we don't have much time. I'm sure we're going to get back to this particular subject again. We're going to raise you on the line. So we thank you very much for your time now, but we'll definitely come back to it again. Now, Russell, we are picking signals from economists and global financial people that it's possible that the UK could come down on the rate again. So going forward, what do you think should be the posturing or the position of Africa to take advantage, for example, Ghana in particular, I'm a Ghanaian, to take advantage of these moves?
Well, it's kind of interesting that when the interest rate was cut, the value of the British pound fell on the currency markets. That, in effect, has created a bit of volatility elsewhere as well. But I suppose the real challenge for the government of Ghana is to prove that the economy can be put back on an even keel again, to get through the financial crisis with the help of the International Monetary Fund, and then look at the situation in the UK. I don't think interest rates will go into negative territory. There's still a bit of wiggle room or wriggle room for the Bank of England to cut rates further if necessary. Lower interest rates does help businesses with lower costs, but ultimately, Britain is going to leave the European Union. It will require new trading partners and new arrangements, and this is something that Ghana can take advantage of. That long-standing traditional relationship that Ghana has had with the UK is still very much alive and kicking, and this is something that the government of Ghana and businesses in Ghana can take advantage of. The businesses here will be looking to create new arrangements because they will no longer be under the umbrella of Brussels anymore, and so we'll be in a new area 2 years or so from now, once the UK is outside the European Union. And hey presto, a huge advantage for businesses. But the government of Ghana has the challenge of ironing out inflation in the country, because obviously inflation is making the central bank increase interest rates, which in turn is making it very expensive for businesses to borrow. Once that happens, once the economy's back on an even keel with the help of the International Monetary Fund, then Britain really very much is open to business with Ghana. And after the exit from the European Union, many, many opportunities will be there for businesses in Ghana.
Okay, but Russell, sorry, in like 15 minutes, 15 seconds. I'm sure, definitely, we are not to relate with England as in importing from England, but rather to negotiate so we can export more.
Yes, ultimately, Ghana's become an exporter of oil. Why not export other things as well? Ghana needs to create or boost other industries. And you've got a situation that the British pound has fallen in value. So the one problem that creates for Ghana is that goods made in Ghana become more expensive for British consumers to buy because of the fall in the pound sterling. But a lot of that is going to be evened out long term. It is possible that Britain might suffer a recession on the way to exit from the European Union, but we'll be in a new territory then. There are opportunities going to be opened, and Ghana really has to ensure that businesses in the country see the opportunities are there. Britain will have to renegotiate trade deals with all countries in the world once it's outside of the European Union. And that may bring many barriers, but opportunities as well.
All right, we thank you very much, Russell Padmore, there from the BBC, for your perspective here on the marketplace. And moving on, many startups begins an idea about a product consumers may want, but how about a product the entrepreneur themselves want? This is what we are answering here. Well, that's the story of Francis Afiga, the CEO of the startup company Doughman Foods. Later today on the Joy Business Van, he'll be sharing how his craving led him to start selling donuts. Here's an excerpt of what you should expect.
It's a very busy day for Francis. He and his team have got to make 400 pieces of donuts today. What's curious though is how an app developer got into the business in the first place.
I get asked that question several times, and a special friend got me donuts, and the donuts tasted really good. So I asked for donuts a second time, and the next time when she was come, she said, "Oh, the donuts were out of stock." So then I thought, what time did you? I asked her what time did she go. She said, "I went there in the morning around 9 a.m." And I thought that if the donuts finish at 9 a.m. and they tasted this good, then it means there's some opportunity in there. So then I started, I did some research into how to make donuts. I got a team together, and then we started.
Doughman got off to a slow start. The challenge at the beginning was getting people to patronize.
So now time to look at your investments and how they are faring here in Ghana and on the continent of Africa. We're looking at Ghana in particular today because we don't have much time here. As a total volume of 50,528 exchange hand yesterday at a value of 14,744 in terms of the value traded. That brought market cap of the Ghana Stock Exchange to about 54,641.84 million Ghana cedis respectively there, as against 54,635.30 million Ghana cedis. So that's exactly how it is. But then the ranking in terms of the composite index also happened to appreciate marginally by 1.16 points, and the decline year on year also recorded some marginal depreciation of 9.64% per annum. And that brought the financial index also to 12.47% per annum. Now, let's look at the movers of the market as GCB Bank topped the movers as it returned 1 pesewa to their investors and opened the market at 3 Ghana cedis, 37 pesewas per share. And Goy follows suit, also returning 1 pesewa and opened the market this morning at 1 Ghana cedis, 37 pesewas per share. Now, let's look at the Nigerian market, which also recorded something gainfully for their investors, as Afro-Prudential recorded 111 Kobos, Guarantee Bank also recorded 10, Zenith Bank 2, FBNH 1, and Pharma Deco also recording 1 respectively. So that's exactly, those are the top 5 gainers of the market. As the losers included Diamond Bank, Continental, AIICO, FCMB, and ETIA. That's the parent company of EcoBank Ghana. Now, looking at the commodity that's from the international market, we're looking at crude oil, which is currently trading around $45.37, almost around 14% in terms of the increase. And gold, after losing $3.22 per ounce, is currently trading around $1,332.80 per ounce. And finally, cocoa, just about when the market is opening, is gained just about 1 cent and is currently trading around $3,047.68 per ton. So that's exactly how it is. Now, finally, we look at just of how the Ghana cedi is faring against the top 5 currencies across the globe. And against the US dollar, the cedi is losing. And against the British pound, it gained marginally, lost to the euro, gained against the Chinese yuan, and gained against the CFA franc. So that'll be it here on your investment and how they are faring, and here also on the marketplace. My name is John Kojo Amuako. Have a very good afternoon. But you can stay interactive if you want to. Our Twitter handle is Joy Business GH, and on Facebook we are at Joy Business. And you can log on to myjohonline.com/business for more business stories. Have a wonderful afternoon.